Hey YouTube, this is Zach with Achilles Financial, and I have a quick update video for you going over the Fed Reserve stress test results. As you can see, I had a lot of exposure into Bank of America. We were getting ready to break positive. I really just needed this call in particular to go up by 2. I don't know if that's going to happen. We need to see how these stress test results get digested. If you want to know about the stress test results and what they include, I'm going to show you those resources. They are very important. And as you can see, the market is still digesting them. I think that the reason we saw this huge drop right here is because of the news that the Fed said that they are going to limit, or rather state, no more share buybacks this year, which all of the large financial institutions, all of the banks had already said we are not going to purchase more shares this year. However, the thing that we are watching, and the reason that this is important, is because this time the Fed said you can't. It was not a matter of the bank saying we are going to stop. It was they said you cannot. That means even if we're going to have a good recovery, that they would still not be able to purchase those shares back, which is why we've seen such a huge increase. So where do we find this information? So you can go to the Board of the Governors of the Federal Reserve System. You can type in DFAST stress testing, which stands for Dodd-Frank Act stress test. And these are the documents that I am looking at, these 3 right here, as well as the related stress releases. So let's dive into the stress relief. So this is huge and incredibly important because, again, all 34 banks that are tested, these are all the banks that have over 100 billion in total assets. So these are super regionals and international banks. They are huge. They all maintained above the worst case scenario threshold of really it's 6% for capital ratios. Again, capital is very, very important to the regulatory agencies. So they all perform very well, even though they make the statement that we are looking at a little too close to minimal levels. So all large banks, and this is the part right here, need new capital plans right here, and then they are not going to be allowed to do any share buybacks because they want to maintain that strong capital planning practice. So here's the big one as well. As a result, the bank cannot increase its dividend, and it cannot pay dividends if it has not earned sufficient income. So we've seen rates drop down to 0. We see a lot of forbearances. We expect defaults. So the banks are allowed to issue their dividend. They cannot increase their dividend, which I don't anticipate would have happened anyway. However, it's all these statements where you can't. You can't. That is what's going to be confusing shareholders. That is what's going to be worrying, because even if the banks are strong, which they say that up here, they say in 3 times separate instances, the banks are strong. They have a lot of capital. They're going to weather this. 34 of 34 with only a few worries. And if you want to see those individual banks or what the actual stress test looks like, you can look at that report here. So you can find that information here. It's got all of the testing methodologies if you're really that interested. The important thing is these are the scenarios that they tested under. Again, the capital ratios are doing very well. We're still doing great as far as the overall portfolio plan. So they've got all of this information in here. Again, the key item that we want to be looking at is how did the individual institutions perform? How are they doing? And I think it's important to note that, again, they did very well. So there is a lot of strength. It's going to be interesting to see how the market takes this. Unfortunately, I don't think that we're going to see the final results or the impact of this until tomorrow at market open. We had a really strong day. As you can see, Bank of America almost 4%. JP Morgan was nearly 4%. Wells Fargo was a leader today. You can see that just, again, they were killing it, and we're seeing it bounce back up. For me to benefit from this in terms of the trades that I performed, you can see all the trades I have were up today. I need the banks to continue to show this strength, and we just need to recognize the important thing here that people are going to be digesting is that the banks are strong. They are well capitalized. Even though they were told by the Federal Reserve and by the FDIC that you cannot increase your dividend, that does not mean that the banks were going to. And I think that people need to recognize that the dividend is safe as long as the bank is profitable, and that they were not going to issue share buybacks anyway. And all of this was talking about this calendar year. So we'll find out more on a go-forward basis. But I think that overall is going to show the strength of the industry. We need this to continue in a positive manner Again, JP Morgan Chase, Bank of America doing very well. Wells Fargo is up. HSBC, they were traditionally a weaker one. Citigroup still up a lot. They're doing very well. So I think this news is going to be taken well. We need the market to bounce, at least for those of us who bought calls. So let's see. I'm optimistic. It was a really good report. I am planning on reading a lot more of it because it goes through the individual results of the 34 institutions. And of particular interest to me are JP Morgan, Bank of America, Citigroup, and Wells Fargo. They're known as the Big Four. So I'm going to look at those. Again, I'm optimistic. Climb, Bank of America, climb. So I'd like to see this open up strong tomorrow. Let's see what happens. And again, if you want to find that information, it's going to be on the FDIC website. So thanks for checking out the video, and see you all later. Thanks.